Hey guys, welcome back to the channel, and we've had a reasonably flat day here. We're just looking at a 15-minute chart on SPY, and you can just see we opened slightly up, made a little bit of new highs, and then just come 2 o'clock, we've just sold off, and a little bit of volume and an uptick to finish the day. The Q's actually finished up a little bit, and we'll just show you the heat map. You can see it was a little mixed out there. Overall, just a little bit of red. Basic materials held up. Amazon and Tesla are actually up, but overall most sectors were showing just a little bit of red. Back over to the charts. Okay, let's switch over to a daily chart here, and we can see the Qs have just almost come down to their 50-bar VWAP. We do have SPY below it. Same with Dow. Mids just under it, and smalls sitting right on it as well. Out of all the international indices, we've only got the United Kingdom still just slightly above the 50-bar VWAP. All others in Europe as well, slightly above. Japan and China below. So overall breadth out there is bearish. We seem to be still in this pullback. Did have VIX 9-day actually come off a bit today, 9%, and we haven't broken this trend line that we've been watching on 9-day volatility. So market isn't pricing in any sort of crash yet, as generally when the market big smart money options thinks we're about to crash, this 9-day will start shooting up. We did have VIX though make a bit of a new high today, and higher high, higher low, so that's still trending upwards. Moving on, if we just look at realized volatility, just go to a 3-day chart, it's still flat. So actual volatility in the market is still low, even though implied volatility is starting to pick up. And over to put call ratio, had a few puts being bought, and that's trending upwards a little bit as well. Breadth here, this is still yesterday's data, but we can see this is has rolled over. This is the amount of stocks above the 20-day average, and that is approaching oversold levels that we usually see at short-term bottoms. And same with stocks above their 50-day average. It's come off a bit. And look at this chart of the amount of S&P stocks above their 200-day average. That's actually just broken down this trend line. So this is what you really need to see in a structural bull market. You need to see the amount of stocks above the 200-day average, above 50% and continuing to climb. So we're still at 60%, but if this were to continue down, then this new bull market that a lot are claiming would be in question. Over to the spread charts, they actually bounced today. Growth, high beta, cyclical stocks actually had a little bit of a bounce today versus their defensive counterparts, and high yields versus treasuries actually had a little bit of a bounce today as well. Even though we've had Fed fund futures continue to climb today, and as you've been watching the channel, this is what I've been talking about a lot. We seem to be in a parabolic walk the line uptrend here. So they all ticked a little bit higher today and seem to be moving up. However, we did have bonds tick up a little bit, and high yield bonds gave a little bit of bounce, but we then hit this trend line and has pulled back. And so I'm not sure whether this is a bottom here or we can continue down. This would be then bearish for risk sediment. So we really need to get above this trend line here for risk sediment to hold on here at what could be towards the end of this pullback move. But we'll get into that a bit later. Dollar is up a little bit, still on this bull flag formation. If we go out to a weekly chart, looks like we could be resuming this uptrend, because we've done about a 50% retracement here and bounced off support. So dollar's looking like it's got some bullish price action in it. Bitcoin came off 2.63%. Looks to have formed a little bit of a topping formation. And commodities were down overall and approaching oversold support levels. If we look on a weekly here, we can see commodities really need to hold this level here to keep their overall structural bull trend intact. But we do have a growing dollar, which is a headwind to commodities. Dr. Copper is still trending up though, above its trend line. Gold is weak and is definitely continuing its pullback. No signs of that stopping as of yet. And oil is approaching oversold support levels as well. Natty gas had a little bounce today, and over to the stock sectors. You can see we're quite mixed here. We actually had ARK up 2.4%. I think that was a lot to do with Tesla, which we'll get to in a bit. Clean energy just up a little bit. Discretionary was up 0.5%. Biotech actually had a good day at 1%. Gold miners was the worst, sectors down 2.3%. Still selling off on volume here. Wouldn't be ready to call that a bottom anytime soon. And home builders had a little bit of a bounce here, but this is still bearish price action with all this volume. And I'll just show you some charts that are of interest today relating to the housing home building market. Here we've got home buyer demand for mortgages. That's actually at over a decade low. The amount of demand for mortgages, the mortgage index is now at 147. And if you look at the monthly cost to buy a house, that includes mortgage, taxes, insurance, that's looking like a real kind of blow off top up here. It's hard to see this keeping to grow, and that's putting a lot of pressure, headwinds on the housing market and thus home builders. And this is the house payment to income ratio. So most folks out there are spending 40% of their income on housing, which is also really near its high. So it's hard to see the housing market having much room to move up further. Actually, the risks are down on the downside. So going back to the charts, with all this data and home builders and housing markets, there's just a huge divergence between home builders and the fundamental data out there. Now we've had a pretty good this move here yesterday off almost 4% on volume down to under the 50 bar. I'm still short home builders here. Moving on, the defensive sectors came off a little bit today, still trending downwards, so there's no big rotation going on into defensive sectors. On the popular stocks, BlackRock Barometer actually came off today on volume and sitting down here at the bottom of its buy-sell band, and isn't looking too good since we've just taken out this support by a few ticks. Microsoft just pulling back. Google putting in a little hammer dojis, trying to find support here. And Nvidia is holding as well around its support. And Tesla, there seems to be bids in the market. If you look at the price action on this, it's just not letting any buyers waiting for a good pullback that it's not getting it. You look at these wicks here, that's just been bought. So there's still plenty of bids in Tesla here. Meme stocks overall had a pretty good day, up, which is a contrarian signal. So once again, people are buying meme stocks here. And active today, Palo Alto Networks, surprised on earnings and up 12.5%. And Coinbase, after their earnings yesterday, came off a little bit. And for those interested, we've still got on our stock fair value indicator, we've got fair value on a Coinbase at 38.71. So according to that, we're still 58% overvalued. So this stock is no longer cheap as it could have been back down here at 33, but got up to almost 90. So this run in Bitcoin for now might be over. Okay, so back to the markets overall. If you've been watching the channel and I came in today 20% net short, finished the day slightly up. And just looking at this pattern here, if we do a Fibonacci on the SPY, it has done almost a 50% retracement. A 62% retracement would take us down to 392, which is a bit of a support level. We've had some turns before, and we are below the 50 bar. The Qs haven't quite done a 50% retracement yet. That would need to get down to 287 on the Qs. We're at 294, so it could still be a little bit more in this pullback if we are to hold this uptrend move that we've seen from the start of the year. But volatility still hasn't, and especially up the front, isn't indicating that we're going to crash anytime soon. Of course, this can change real quick, but for now, it just looks like we're just having a little bit of a soft garden variety pullback. here, and you can see on the range strength the market's still ranging, so there's not a whole lot of trend out there. How I changed portfolio today, I added a few more shorts, so I finished the day 60% net short going into tomorrow. And if we just go back to the economic calendar, you can see tomorrow we've got initial jobless claims out, so that'll probably have a bit impact on the market. The trend lately has been a tight job market, which is putting upward pressure on inflation and keeping the Fed's foot on the gas. So that'll be the one we're watching tomorrow, and we'll just see what happens with price action and whether this pullback is going to find a few bids and stall out. Okay, that's all for today. Thanks for watching, and hope to see you tomorrow.